Welcome to CapEd Makes a Podcast. It's November. Don't know where 2021 went, but it's almost gone. And I'm Matt Johnson. I'm in our marketing department here at CapEd. And today I'm being joined by Jamie Alexander, a new addition to our marketing team. Jamie is going to be our social media specialist. How's it going, Jamie?
It's going great. How about yourself?
Good, good. Yeah, so this is exciting times for us. We're going to have Jamie going out and about and doing more with our social media. Just a point of note, if you don't follow us on social media, now's a good reminder. Where can people find CapEd on social media?
Pretty much if there is a social media platform, we are on it. We are on Facebook, Instagram, Twitter, LinkedIn, and we now have TikTok.
TikTok. And speaking of TikTok, I understand you recently met Edward the Bookworm.
I sure did. Edward and I are becoming great pals. We definitely got to start off our relationship jumping into TikTok.
Awesome. So people can go to TikTok and see Edward under CapEd.
Yes, exactly. He is our introduction.
Awesome. Well, that's a great introduction. I mean, I couldn't ask for a better introduction. And, speaking of Edward, Read to Rise is kicking off with our local elementary schools. This is a program that we run during the school year to promote early childhood literacy and to get kids to read more. And we've changed some things. We've done a number of things in the past to get people to participate and get schools involved. And this year's really different. And basically, there are two ways that a school can enter this program. And one is to invite us, CapEd, and that would be probably you going out to a school along with Edward and probably some other members of our team, and participate in a family literacy reading night. That's one way to enter. And then the other way is if that's not an option for your school because of COVID or for whatever other reasons, maybe even weather or location, you can enjoy a recorded book reading by CapEd's very own Edward the Bookworm. And just, play the video of him reading to your students in your library, and that will count as your entry. So hopefully you'll get a chance to go out to some schools to do that.
Yeah, definitely looking forward to it.
So I guess once you're entered into that to participate in Read to Rise, at the end of the school year, basically it'll be a random drawing. And do you know what comes with that random drawing?
I'm going to need a little fill-in.
Okay. Well, Jamie just started. Literally her first week here, and I'm putting her on the spot. So yeah, with that, we actually bring the Read to Rise hot air balloon out to the school. We do an inflation on the playground or nearby the school. The students get to check it out. They get to look at it. Pilots explain how hot air balloons work. And then Edward goes into the school and does a reading with the younger grades, usually kindergarten and first grade children, depending on the size of the school. So,
and if you aren't familiar, Edward does live in the basket of the hot air balloon.
Excellent point. Excellent point. Yes, the Read to Rise hot air balloon is in fact Edward's home. And so, yeah, he comes out with his house, inflates it, everybody gets to look at it, and then he gets to read a book. So it's an exciting time for him and for the kids, and everybody always seems to enjoy it. So a little different this year, and that's how we're going to do it. So having covered all of that, this month, shifting gears in a big way, we're actually talking about mortgage loans and the housing market, which is beginning to change. It's a little different than it was even a month or so ago. And so Todd Christensen, our SVP of marketing, is going to be interviewing Dan Sullivan from our mortgage department. Dan Sullivan, if you don't know, is really kind of a local guru when it comes to the real estate market. With that, I think we'll jump off and let them tell us all about that.
Yeah, I did have a chance to get a quick listen to that. And as being a first-time home buyer eventually, it definitely gives me a lot of hope and makes me feel a lot better about my future. So definitely give it a listen.
Oh, fantastic. Really good to know. Well, I hope other people listen to it and get the same thing out of it. So thank you, Jamie.
Thank you.
All right. Chat with you later. Insured by NCUA, Capital Educators Federal Credit Union is an equal housing lender.
Well, welcome to the November CapEd podcast. My name is Todd Christensen. I work as the SVP of Advancement and Member Experience with CapEd Credit Union, and we have a great guest today. As we rounded out summer, finished up fall, and headed into winter, wanted to give everybody an opportunity to learn about the real estate market and some of the new products and services available through CapEd to help first-time home buyers. So let me introduce Dan Sullivan. He is in our mortgage team, expert. Dan, how long have you been in the mortgage industry here in the Treasure Valley?
In the Treasure Valley, 31 years.
31 years. So we can officially say that you are truly the subject matter expert because you've got 3 decades of experience.
I don't know that anybody's an expert in mortgage. It seems like the moment you think you understand it, they change the rules. So.
Fair point, but things do happen to change, and it's good that they do change because new products and opportunities to help individuals. But as we jump in here to the November podcast, before we started, we were kicking around a few ideas that we wanted to share with our listeners, and I noted down in a state of the real estate market here in the Treasure Valley, maybe even far out as the Magic Valley or at least southern Idaho, of what are you seeing from mortgage volumes, home prices, new construction? Kind of give us that view back a couple of months and maybe even that crystal ball for a few months ahead.
Sure. So everybody's probably aware of the outrageous prices, the pricing increases that we've seen in the real estate market over the past 24 months or so. And normally we see homes appreciate in the 4 to 5% range per year, which is normal and healthy. And we've seen increases in the 17, 18, 19%. Even I think there was a couple of months there where we were seeing home values increase as much as 20% a month or a year. The annual increase year over year, and so that has certainly impacted the market. It has impacted the ability to buy a home, the ability to move up. Even though if you are a homeowner, your home value may be increasing, but so is the value of the home you want to buy that you're trying to purchase up. So it's really horrible for the first-time home buyer because home prices over the past at least 2 years have been increasing at a pace, far outpacing the wage increases. And so very, very difficult for the first-time home buyer. Luckily,
where do you see those prices? Are they starting to level off? We hear or see some data out there that those, 10, 15, 20% annualized increase per month is starting to either stabilize or even maybe pull back a little bit. Are you seeing that?
Yeah, we're certainly starting to see them normalize. And going back to a 4 to 5% annual appreciation, we're not there yet. I think we're back down to, we'll see, but I think last month we were at about a 10% increase, and they see it. The Mortgage Bankers Association, which I watch their economists closely, they're seeing us getting back down to a 4 to 5%. There's nothing in the radar at the moment economically to lead us to believe that we're going to see home values decline. And that it happens from time to time. But there's just nothing out there that leads us to believe that we're going to see a decline anytime in the near future.
Something like we saw in 2007, 2008, where there was if you will, a market adjustment. But here it's more of a plateau that prices are going to remain about the same or more normal increases rather than the escalated increases.
Yeah, back to a 4 to 5%.
Okay.
Annual increase, and then I think we'll see wages catch up. One of the beautiful things about the capitalist society that we live in is everything comes back to equilibrium, and well, something will get out of whack. Home prices will get out of whack, but eventually we'll run out of buyers because there's nobody out there who can afford these tremendous prices, and so that's when the home values either come back to normal or even shrink at times, and wages come up, and suddenly everything's kind of back to equilibrium. So everything eventually comes back to equilibrium.
Comes to that equilibrium point of supply and demand, both on the wage standpoint as well as the home prices. What about rates? Another factor that a lot of people look to is not only the home price, but mortgage rates. Can you give us a sense of where they've been for the last month or so and where you see them going in the next 4 or 5, maybe even 6 months?
Yeah. Most economists agree that we're going to see interest rates rise over the next several months or over the next several years. We've seen historically low rates, and we bottomed out probably in about February or March of this year, and then we've kind of been dragging along the bottom, and we saw rates start to come up in June and have seen them slowly rise up. The economists I follow believe that we're going to see interest rates continue to slowly go up, and so the end of 2022, I think they're predicting their rates will be around 3.5, and then 4, and into 2023. It's all a super wild guess, of course, and they've been wrong so many times before that, and we all admit that it's just a guess into the future. Different things can happen, and but it's generally considered across the board that rates are going to go up. With inflation happening, rates are going to follow.
Okay. I'm thinking of a disclosure that we are sharing our thoughts and our opinions at the best guess that we have available today here in November 2021. So things can change, but I think from the things that I'm reading and seeing that you've shared that we're fairly flat, maybe some small increases, but still 3.5%, even 4%. Those are some great rates in purchasing a long-term investment such as a home.
Exactly. It's still, money is on sale, and it's a great time to buy money, to borrow money, and so normally a normal rate right now would probably be in the 6 to 7% range. So
right.
Mortgages are on sale.
We've been in that lower rate environment for well over a decade now, and continuing to support buyers. You mentioned a little bit about first-time home buyers and the challenges that they have, especially in the price environment of the Treasure Valley, for that matter, the Magic Valley. I know that we as CapEd, we've launched and made available the first-time home buyer savings account to specifically help those that are purchasing for the first time. You want to share with us how that works and the advantages of that account?
Yeah, the first-time homebuyer account is reasonably new to Idaho residents. You have to be a resident of Idaho, but you have to be a true first-time home buyer. So you cannot have owned a home at any point, but it's a savings account available that allows you to save up to $15,000 as an individual or $30,000 as a couple per year. You can take that money, put it into this savings account, and there are tax advantages on your state taxes that make it well worthwhile to do that. Those funds need to be used to purchase a home eventually, and for down payment, closing costs. You can, if you use it for something else, you're going to pay penalties and the taxes on it. But it's another vehicle that allows borrowers to, first-time home buyers, to put substantial amounts of money, and even if it's, even if they're putting $50 a month into it, it still has tax advantages at tax time on your state taxes. So,
on that, just to make sure that our listeners heard those numbers correctly. So, how much can an individual save on an annual basis, and then a couple?
Up to $15,000 as an individual, up to $30,000 a year as a couple, with a $100,000 maximum.
So they could save, if it's a single individual, they could save $15,000 a year and then apply that to appropriate expenses in purchasing their first home, or $30,000. Am I understanding that correct, as a couple?
Yes. Yes.
Okay. Up to that $100,000 that could go against their Idaho tax liability.
Exactly. Yeah.
What about if somebody were to, we have twin daughters that are both married, both are in apartments, both wanting to purchase a home. Would we be able to gift funds to them and they could use that, or is there any consideration around that?
Yeah, anybody could gift those funds to so their niece, their daughter, their granddaughter. They can gift those funds into that account, and the first-time home buyer will get the benefits of the reduction of their Idaho taxes from that account. And so there's only a 30-day look back, so we look back 30 days, and anything beyond that, we just assume that those are your funds that you put in there yourself.
Okay. I think sometimes we may hear the terminology that that's the seasoning of those dollars, that they have to be there at least 30 days.
Yes.
Okay. So it's a great opportunity. Anything else that we need to share on first-time home buyer, any of the nuances of how that program works?
I would just make sure you check with your tax advisor before you do this. We don't offer tax advice. We can tell you how the program is supposed to work, but reach out to your tax advisor to make sure that it's an appropriate vehicle for you to save those funds in.
Another good disclosure and a statement there of, do check with your tax planner, tax advisor, as it relates to how the Idaho first-time home buyer savings account, which is available through CapEd. You can find more information on this savings product at CapEd.cu. So CapEdCU.com/savings. I'll say that again, CapEdCU.com/savings, to learn more information on the CapEd first-time home buyer savings account. And again, just a confirmation or reiteration rather, that is for Idaho residents and for purchasing your first-time home in Idaho as your first home. So some elements around there, but some great savings and tax advantage opportunities within that account. We talk about looking for homes, trying to find the right home, maybe rising rate environment, but we have great rates today. How do I take advantage of a great rate today, but I'm not going to purchase for, say, 6 months? What can CapEd do to help me if I'm in that situation?
I'm glad you asked. CapEd has a program that we designed. I don't know of anybody else that has a similar program. We call it our lock and locate. And so it allows you to lock in today's interest rates and then go locate or build a home. And so lock and locate is a program that's exactly that. If you're building a house, one of the fears is it's going to take me 6 months to a year to build the home, hopefully. And so you can't lock your interest rate until really 60 to 90 days before the closing of that home. So you don't know what your payment is going to be on that house 12 months from now when it's done, because we don't know what the interest rates are going to be. Lock and locate allows you on new construction to actually lock in today's interest rate for up to 12 months on new construction. And when that home is done, you know what your rates are going to be. One of the things I love about it is if interest rates go down between now and the time your home is completed in 6, 9, or 12 months, we have a one-time float down, so you can actually get the better interest rate. If rates go up, then you've already have your loan rate locked in. And so if interest rates go up or down and you've taken advantage of the lock and locate program, you're the smartest person in the room. There's a 1% deposit on the loan amount. So let's say you're borrowing $300,000. You're going to put $3,000 into an account that we hold, and at the time of closing, we're going to refund that in the way of lowering your closing costs. So we give that deposit back to you.
Okay. So just on that, to be able to secure that lock and locate, CapEd requires a 1% down of whatever the final loan amount is going to be.
Yes. Mm-hmm.
But that, again, then is applied to any closing cost or reduces the principal loan amount.
Exactly. Yes.
Okay. And that's available for both purchase as well as for construction?
Yes, we offered originally it was a construction product, and then we realized that we should also offer that for purchase products. So let's say you know it's going to take a little bit of time to find your dream house. You can lock for up to 6 months on today's rates and go out and locate a home. You can go find the home, but you know that you qualify for a $400,000 house. You're doing a $300,000 loan. You put a $3,000 deposit, 1% down, and then go out and you have up to 6 months to search for that house and find that house under this interest rate structure.
And having the security of knowing that your rate's not going to go up, and even if rates were to go down, then you have that, what you refer to as a one-time float down to secure that lower rate.
Exactly. Yeah. Yeah.
Well, that is very interesting. I would assume individuals would be able to tie both the first-time home buyer as well as the lock rate or lock and locate together as an opportunity to assist them in securing their home?
Certainly. Mm-hmm. Yeah.
Well, those are some pretty interesting items. Around lock and locate, we would direct our listeners, if you're interested in more information, to go to capedcu.com/loans and then click on the mortgage tile, and then there's information around lock and locate. Dan, for individuals who are listening here and want more information or to reach out to you or to any one of our mortgage officials, where's the best place to send them? Do you mind folks reaching out to you directly, or what would be the best way for folks to get a hold of CapEd mortgage professionals?
Well, they're welcome to reach out to me. Of course, we have a loan officer in every branch, and so they can go to the local branch, whichever one's closest. They can call the local branch and ask for the mortgage loan officer, or they can certainly reach out to me. My direct line is 208-855-4695, and I can answer general questions. I don't originate loans, but I can certainly then refer them, answer their questions, and then refer them to a loan officer who can help them.
Excellent. Well, how long is, I've heard out in the marketplace that, I didn't know that CapEd did mortgages. How long have we as a financial institution been offering mortgages?
I don't know that exact date, but somewhere back in probably the 60s or 70s is when we started offering mortgages. We didn't really get into it in any great level until about 10 years ago, and was when before we always kind of did them, and they were always available. But about 10 years ago, CapEd decided to start a actual mortgage department, and I've been here 8 years, and I've had the opportunity to hire some very, very experienced loan officers. Many of my loan officers are actually older than I am, and have several of them have more time in the industry than I do.
Hard to believe that they have that experience longer than you, and you've got that 30-some years.
Yeah, so we have some very, very experienced and very, very good loan officers, and so I kind of call them my dream team, because I have this wonderful group out there that is very experienced and very, very good at what they do.
And on the underwriting side, not to dig in too much around the operations, but CapEd has its own underwriting, its own servicing. Your note's not going to get sold off to somebody else that you're going to have to worry about where you're sending the monthly payment. Talk a little bit about that, if you would.
Well, we have a number of options available. Better than half of the loans we do are held right here at CapEd. You make your payments to CapEd, and we service your loan. We keep your loan. It's the deposits of our members that are funding those loans, and so. But we also have the ability, if you're in a situation where you don't necessarily fall into the CapEd underwriting box, then we have other investors out there that we can send out to, including Idaho Housing and Rural Development, which both have amazing first-time homebuyer programs. So sometimes you just don't fit into our little box, and many do, but certainly have the ability to step outside and get the borrower into the program they need to be in.
That's to say that we have a variety of options to be able to help you to secure that loan for the home, either that you're building or wanting to go purchase as an existing home.
Yes, or sometimes it's a refinance. Sometimes it's whatever you need. We have VA lending. We have FHA lending. We have Idaho Housing, Rural Development, a number of different programs available to us. So whatever we're gonna put the borrower into the loan that's best for them, and many times that's here at CapEd, but every now and again we can get a better deal for them, a better loan product for them, the product they need somewhere else,
based off of their specific and unique need or aspect of what they're wanting to accomplish, meaning that we have an opportunity to not do it as a cookie cutter approach, but rather what's best for them, both short term and long term.
Yes, every loan is custom. Every person's situation is custom, and so we customize the loan to the person. And we've never had two borrowers in my 31 years in this industry. We've never had two borrowers who are the same.
Well, and I think that goes to the individual nature as we work to focus on helping members at where they're at in their financial journey and assisting them in their financial well-being. You mentioned the word refinance, and I guess I don't want to go here for too much, but if a person had X rate for their mortgage, what rate should they think about refinancing based off of today's interest rate? If their rate was 6%, should they refinance? How low is that rate before it just doesn't make sense, generally?
Well, generally speaking, it depends. So let's say today our 30-year fixed rate, I think, is at 2.95, assuming that you have normal credit. And so let's say you're going to be in that house forever. I'm going to live here until as long as I can. So I'm going to be in this house for 10, 20, 30 years. If you're at, say, 3.75 in that range, you probably ought to talk to us and have us run some numbers for you to look at what the closing costs are and what your lower payment would be. And so certainly in that scenario, if you're going to be in a home for 3 to 4 years and then we're going to sell and we want a bigger house, or we're moving somewhere, or it's just not fitting our needs, that you may want to take a look at that.
That's that unique or individual nature of each transaction.
Right.
Okay.
Sometimes you might borrow money. Let's say your interest rate might go up because you're taking cash out of the house, but you're paying off credit cards, you're paying off car loans, you're paying off higher interest loans. But sometimes it can make sense actually to refinance and get a slightly higher interest rate if you're using the money to pay off debt that's at a higher rate, or using the money to refinance or to upgrade your home or different things like that. So there are times where it actually might make financial sense to get a slightly higher interest rate.
To be able to consolidate and do those elements. You referenced your dream team. We would encourage folks to make contact with one of those members of Dan's dream team to be able to go through your individual circumstances and see how CapEd can help you in your financial well-being. Well, Dan, appreciate your opportunity and your time today to chat on that state of the real estate, the volumes, home pricing. We do hope that they tend to plateau out there, and I guess at least for some of the first-time buyers or those that are looking to get into the market so they're not dealing with astronomical increases month over month. An opportunity to chat on the first-time home buyer savings account available through CapEd, and then also lock and locate. So appreciate your time, Dan. Any parting comments that you'd like to share with our listeners today?
Just, real quick, I heard somebody say that, home prices, they'll never be able to afford a home. It was a first-time home buyer, and so I'll never be able to afford a home. And it seems a little desperate at the moment, but things do come back into equilibrium. I remember in probably 2010, after the crash, I talked to a homeowner who said, values will never come up to what I paid for my house in 2006. The value of my home will never go back up to what I paid for it. And I assured them it would. And if they still own that home today, it's probably worth 2, maybe 3 times what they paid for it in 2006. So everything corrects itself. And it might look a little desperate right now to a first-time home buyer. You might think I'll never be able to own a home, but things can change, and things can change sometimes quickly. So
things do come back to that equilibrium. A mentor of mine one time said, and I don't think it was one time, he said it several times, all things work out in the end. If it hasn't worked out, it's just not the end. And that end is that equilibrium. So, Dan, we appreciate your time today. Again, for those who are listening and want more information around the first-time homebuyer savings account, as well as the lock and locate that we referenced in today's podcast, please visit us at capedcu.com/savings for the first-time homebuyer savings account. And then for the lock and locate is capedcu.com/loans. And if folks want to get a hold of you, Dan, can you share your direct phone number one more time as we sign off here?
You bet. 208-855-4695.
Awesome. Thanks, Dan. Appreciate it. And thanks for listening to the CapEd podcast. Have a great day.